iShares and S&P Dow Jones indices are proud to support the Wealth Management EDGE podcast and financial advisors. With more than 1,250 products worldwide, iShares is dedicated to empowering millions of people to make their money work for them. Visit www.ishares.com to learn more. S&P Dow Jones Indices is the largest global resource for essential index-based concepts, data and research, and home to iconic financial market indicators such as the S&P 500 and the Dow Jones Industrial Average. iShares and S&P Dow Jones Indices are unaffiliated entities. Hello, my name is Nabia Jenkins-Johnston. I am the senior conference producer for WealthManagement.com events like Insight ETFs, Retirement Income Edge, Wealth Stack, and I am pleased to host the Wealth Management EDGE Visionaries podcast. We get a chance here to speak to the subject matter experts who make our conference unforgettable. Thanks for joining us. Welcome, Toussaint. It is wonderful to have you join us on the Wealth Management EDGE Visionaries podcast. I have been so excited for this conversation. How are you?
Oh, I'm so good. And there is no way you've been more excited than me. There's no way.
I absolutely love this. And I'd be remiss not to do a quick introduction, although I think there are a few people who don't know who you are. Toussaint Bailey is a visionary in our space, obviously, and so well fitted for the Visionaries EDGE podcast. But he is also founder and CEO of Uplifting Capital. He has decades of experience really changing the landscape of financial advice and steering investors, advisors, clients of all kinds into the right decisions as it relates to investments. So we're really excited to have you, Toussaint. And something people may not know about you as well that connected us is Toussaint also practiced law for, before he started his finance career. So he has a Juris Doctor from UCLA, and we also connect on my past media experience at law.com. So this is coming home, right? This is
absolutely. In so many ways.
In so many ways. So Toussaint, we featured you at wealthmanagement.com in 2022 on 10 to watch in 2023, right? At the end of November. And it's not the first list I'd seen your name on, right? It's not we're not the first publication who has talked about how influential you are and how much you're changing things. So I want to kind of start there. Will you tell us a little bit about why you are on so many lists?
Oh my goodness. Probably because I can't make up my mind about what I want to be when I grow up. That's the start. You're like, wait, what is he? First of all, no, I came into this, and like you said, I'm a lawyer for a decade plus and actually loved practicing law. I did litigation. But I came into this industry to do something different and to grow something different. And initially that was about how firms serve advisors, and by extension, how advisors serve clients. And so the mission of the first firm that I came into, Enzo Wealth Management, which more recently was acquired by Corio, was translating wealth into fulfillment. And so I came into that firm. I think my official title to start out with was Chief Strategy Officer. I don't know what I was strategizing on other than my idea was, look, I'm this junior partner at a law firm right now. I have all these ideas about how equity should be shared to incentivize the best things for young growing professionals. And nobody wants to hear me as this little third year partner with this very established firm. And so I had this group of advisors who were thinking about coming together, who were actually listening to my ideas and nodding. And so we came together in a different way. We talked about this abundance mindset for growing a larger enterprise and how to build a firm, and how translating wealth into fulfillment for clients required translating wealth management into fulfillment for advisors. Like you needed a whale to pull from as an advisor to truly create something more fulfilling for clients. And so that resonated. We were under 100 million when I started with my brother-in-law, Jim Dakota, thinking about that firm. We ultimately sold at close to 2 billion. I think we're at 1.8 or 1.9 based on the day. And that was all around just creating this more meaningful experience of practicing wealth management and getting beyond the typical conversation into things like loving and trusting relationships and self-actualization, and what does collective impact as a firm look like, and what does it look like if we require that our personal gain as individuals be held with gratitude. And so all of that like came in to be different. And I think that's originally it's weird enough and different enough in this industry that conversation resonated with some people, and it stood out to some people. So originally it was as a firm leader. And then, I mentioned collective impact. That evolved into me wanting to figure out what my own impact was. And a lot of this was around 2020, when I feel like all of us were sitting at home and more introspective than ever. And for me, particularly around some of the social and environmental changes in our world, not just our country, I started to examine what my potential influence was and what levers I had to pull to make things a little bit better. And so I started leading a series of conversations about how we could talk better across differences as professionals in wealth management. I started to record those conversations, and we got speaking coaches and listening coaches involved, just how to model a healthy conversation. And for me, so I took a sabbatical and started to focus on that for full time, just this impact that I wanted to have. And it's where I wanted to live. So it became clear that I couldn't go back to being a traditional wealth management CEO and kind of moonlighting at this. And so I started to examine how to help create impact at scale in our industry. And I'll slow down there because I arrived at the conclusion that has sort of created Uplifting Capital.
Well, you can't stop there. You have to tell us this conclusion.
Okay. No cliffhangers. No cliffhangers on my podcast.
Cliffhanger. Diving right into Toussaint.
Well, so like everything to me. So I'm like endlessly addicted. My wife will tell you, endlessly addicted to business books and personal development books. And so to me, there's always a business solution that I want to find to any problem, whether that's a social problem, environmental problem. And so I saw these two trends. Like I thought the most additive thing I could do is fill a gap in wealth management. And so two trends I saw that were happening was this rush to some form of sustainable investment by some clients. And I know we often talk about, younger clients are going to want, more values aligned investments, but it's not only been younger clients, it's also families where those younger clients are becoming increasingly influential. And so, there are other like groups of clients who just care about this. And so I saw that, felt that pressure from clients. The proxy for solving that in a lot of places and for a long time was just ESG investments. And really it's ESG labeled investments, right? Like slap ESG label on something and let's capture this new burgeoning demand. So that was less than satisfying for me, but I saw that as a need. And then at the same time, you have this transition from the 60-40 portfolio, this well-documented now transition and announced death of the 60-40 to something that, right? Like, I mean, if I hear one more, I don't know what I'm going to do. But this announcement that's happening, and there's this transition to the private markets, and that movement is real. And so I saw those two things happening, and I did not see the convergence of those trends in wealth management, but those trends are converging up market. And I have a belief that like what goes on up market must come down. And so up market, you had institutional investors, foundations, endowments, pensions, sovereign wealth, starting to look at what it looks like to do mission-aligned private market investing without concession, right? So things like affordable housing and energy infrastructure and venture, climate-focused venture, and all these other things. So that's happening up market. That then starts to come down to the single-family office. Mm-hmm. So families are starting to want to do mission-aligned investing and realizing it doesn't have to be concessionary. But there wasn't really a solution to do that at scale in wealth management. And I know, if the advisors at my firm had that solution, they certainly would have been implementing that solution at a time when their clients were clamoring for it. Their clients, by the way, so we were high net worth to ultra high net worth firm. At the very least, we have clients with friends at single family offices. We were like, everyone calls themselves a multifamily office at this upper echelon of private wealth. We were just high net worth private wealth, but family offices, multifamily offices, private wealth, all needed this solution. And so I started to build backwards from what was getting in the way. And first thinking about it as a portfolio solution. What did the composition of those investments need to be to create a risk adjusted return experience that made sense? What did the cash flow experience have to be? What did the attributes of the kind of investment vehicle have to be? And then we started to think about things like, what should the impact menu be? Like, what should this have to cover? And how could we make that personalized and still remain scalable? And how could we make that engaging, right? So like I think about this, I call it the fangification. So all the FANG stocks and what they're doing, like they are influencing every industry, and wealth management is not immune. So customer experiences and our client experience are expected to be more engaging. Like think, Netflix and Facebook and Apple, they're supposed to be more personalized. They have to be cheaper, faster, better. And so with that in mind, we started to design what is our first vehicle, which we have successfully closed now, and we'll be back out next year with our second vehicle.
I am so excited. I'm going to be watching for the year, right? For the 10, 9, 8, 7, 6, 5, so that I can find out next year, because what you've done so far is incredible, right? One of the things that I'm hearing as you're speaking, and maybe it comes from being part of an architect led family, having engineers sort of flow through and always being the creative on the outside, is that there's sort of an engineering that you're doing. There's a building from the foundation. So sometimes from the bottom up, and also in terms of vision from the top down, right? You're creating essentially the infrastructure that's necessary to think through this, right? And that is so exciting, because I think that's what Visionaries is really about. It's about creating really a blueprint for our audience to understand how to be Toussaint Bailey, or be the next person that will come in and do what is uniquely their gifting, right, to provide for the world.
Get out of my head. Get out of my head. Like that is literally the job. Like both of those things, and equally. And I think when either of those goes out of balance, that foundation building or that vision, like I feel out of alignment. And so like that vision piece, and I can take you through like all of that's necessary. So for me, like I've now become clear on what we have to do in order to like truly achieve the scale that I think we should achieve. And that's being this multi-billion-dollar solution for bringing values aligned private capital into wealth management. And so one, like for the vision, that vision is 3 attributes. It's unquestionably institutional. So like what we do at every step of the way, increasingly and from day one, has to be unquestionably institutional in terms of quality, which is hard to do as an earlier stage firm. It has to be profoundly personal. And so I think there's no way around that right now in wealth management. And that goes to a lot of the things I talked about, these outside influences. It's also private capital kind of coming into our industry and requiring more of everyone. So profoundly personal. And then the third one is uncompromisingly scalable. So, and those happen at 3 levels, right? So for us, as an asset manager at the firm level, and for investment teams, we have to be unquestionably institutional. That's how we get through the door. For that end client, we have to be profoundly personal. They have to feel like this is theirs. But for the advisor, we have to be scalable and implementable without compromising either of those other 2 things, right? And so that's the vision.
Please continue. I'm so excited.
And so from the foundation, like we intentionally, so we raised outside capital so that we could build a first-class firm from day one. So we didn't like it's very uncommon to raise like a venture round in asset management. First of all, because venture capital doesn't invest in asset management, right? Like, and so like I don't have to talk about how uncommon it is for a person. I know this is audio, but for a person who looks like me, I am African American. For those of you who are listening and don't know, to raise venture capital, I think the numbers are about 1.4% of all assets managed. Like that's well publicized. But so it's uncommon, but the reason why we did it is we knew we had to build infrastructure that was like up to the task for any operational due diligence team, any investment due diligence team from day one.
Yes.
So that was really propelled by our first kind of major firm partner. So we grow in partnership with wealth management firms, multifamily offices
Yes.
and kind of high net worth wealth management firms. Our first was a huge firm that took a bet on us and believed that we would be kind of accretive to their clients. So formerly CI Private Wealth, now Corient. I remember sitting across from the investment teams at that firm and also from wealth managers at that firm who were kind of the champions of us coming in. And the first thing they said was like, look, operational due diligence is a pass-fail test. And so if like, as much as we love you, Toussaint, and we think this solution sounds great and it's, snazzy and all these things, and it's like, if you don't pass our operational due diligence tests, then we literally can't do business with you. And so the light bulb that went off in my head was they had an independent firm that they were going to come in and do operational due diligence on us. I paused them because we work with a very large investment consultant to supplement what our investment team does and to make sure that what we're investing in is sound. So I immediately called, like driving from that breakfast, called the investment consultant that works with us and does due diligence for us. I was like, can you turn your lens on us and do like a friendly due diligence process that turns our firm upside down, like produces a report of the good, the bad, and the ugly of what we're doing. And then we work toward that. And so I called CI and said, like, give us some time. And so we went through that process. We brought in same fund admin, but we brought new IT, cybersecurity, a new compliance firm. We upgraded what we were doing with our lawyers and how those documents look. We created new committees, new policies, all this stuff. We went back in and it was like, a very short conversation around what we're doing. And we were able to turn kind of this operational conversation into a branding exercise. We now, like, part of our sales process is to go out to a firm and like kind of dump that report on their desks and go like, here's what our operations look like, and feel very confident in that. And so that's that foundation. And then the next thing we do is do that same thing with our investments team, right? And making sure that the professionals we have on that team and the process feels the same as the operations. And so it's building there all toward those kind of three attributes that I described.
Exactly. And it's I think one of my favorite, I've been doing content building for quite a while, and one of my favorite go-tos is the masterclass, right? The masterclass that was very popular a few years ago and you couldn't get away from. But I do think of this as sort of a masterclass in getting over hurdles, right? So we are learning today about part of why you've been able to be successful past certain obstacles. And so part of that has essentially been being your own regulatory and compliance system, checking and rechecking your own work enough times to where you can produce a report that essentially says, here we are, and here's why you can trust us. Yeah. We talk about skills in debating, and one of the best ones that I remember from my very first debate class is that you answer the questions that others have of you before they're able to pose them, right? So I am in love with that. And I also heard, as you were speaking, Toussaint, about the importance of scalability, the importance of structure from the perspective of this is what we need to get things done, not just based on what we like, right? Especially ESG conversations get sort of muddled in this space of, do we have the actual infrastructure, building parameters, skill level to get done this vision, right? Because I kind of think of ESG as a vision. People have intentions and they have heart and soul to go after this, and all that's great. But if we can't implement it, then that's a problem. So I want to quickly point out and pivot a little bit to more about impact and how you've been able to really make a solid business case every single time when you walk in the room and say, this is the way we should do this, that you're able to support that. Because what you touched on before, but some people may not know, is your past with Enzo Wealth Management led to its growth, I believe nearly 2 billion, right? And its eventual acquisition. So you have the foundation to say, I've done this before. I'm able to make something financially stable. Here's the growth I'm able to do. How do you convey that as you talk about impact investing and you are teaching that to advisors? How do you make all of this profitable?
Yeah. So first of all, I'm a capitalist. Like I'm clear, I'm forthright about that. There are many, many levers that we are going to have to pull to solve the biggest problems facing us globally. And some of those are philanthropic, some of those are concessionary, but nothing scales solutions like capitalism. Nothing scales solutions like capitalism. And that's my lane. Right. And we talk to clients and we help clients connect with philanthropic stuff and all of that. And so I'm very clear, first of all, that that's my lane. And I'm also very clear and encourage advisors to be very clear. Like I used to spend a lot of my time in this defensive mode that this is not concessionary. Like impact investments, as we do them, are not concessionary. This is thematic investing. Like we're targeting global trends. Like it's not concessionary.
Exactly.
I no longer spend a lot of time saying it's not concessionary. I talk about alpha. I'm like, where we look for impact just happens to align with where we look for alpha. Where we look to invest more inclusively is not because we think, like it's only good for the world. We also think we are going to outperform. And so you think about things like underestimated founders or overlooked investment managers who have been outperforming for a long time and are underinvested because they're looked at as concessionary. Like that misperception is where we find alpha. Or you look at things like the energy transition and folks thinking things like affordable housing are not good investments. There is no stable source of income in real estate like affordable housing. It's literally below market and subsidized by the government. And so those rents show up at times when other rents don't, right? And so like making this case that this is not just something that's not less than, this is something that's better than. And and all of these are global trends, right? If you think about what's happening with the environment and climate change, whether you believe, I think we're past the point where many people don't believe in climate change. People believe in Tesla. And so we're talking about EVs, or we're talking about the energy transition, or we're talking about real estate. I can analogize to things that people have seen make a lot of money. So we do, most of our investments are with portfolio managers. We do them through funds. We're essentially this kind of configurable. We can align fund investments with people's impact interests. And like, I won't walk through the whole solution, but we have a sliver of direct investments. And those are co-investments where we invest alongside managers. Our first, I syndicated an investment in before Uplifting Capital was even a thing. And it's called a company called Spark Charge. We invested in their Series A, and we continue to follow that company. But it's young African-American founder started a mobile electric vehicle charging company, and so he says we're the Uber for electric vehicle charging. People have all this range anxiety. People have all these new Teslas, all these new EVs. We don't have enough charging stations to catch that, and so like while that infrastructure is being built, we have a long way to go. And the energy transition isn't something that happens overnight and everyone's going to run out and have the infrastructure or the right tools to do it. And so who's going to invest in that literal transition? And so for us, that's not a charity case. That's not a social belief. That's an investment trend. And that's something that's happening in real time. So we invested in it, and so far it's done well for us. And there are all sorts of examples like that in this area where there's this perception of philanthropy. I still have, I have family members who are like, "Did you get any new donors?" I'm like, I do not do philanthropy. Like these are absolutely market rate investments. I talk a lot about the social good that this does for the world, but I am not a 501c3. I'm not a charity. Like I will help them invest their money if they have their foundation, but I'll do that. Yeah,
exactly. Toussaint is a capitalist. Okay.
Yeah, that's it.
And I love this. I want to say that it's important and near and dear to me that we have real growth potential when we make any decisions around money. That's to me, that should be assumed. But I love that you're making this work. And so I would be, again, remiss not to mention that we have the honor and privilege of having Toussaint Bailey on deck, on stage in 2024 to talk about the work that he's been doing and where we can go as an industry together. and really do this from the lens of strategy. What should allocation be looking forward, which is what the Inside ETF stage is all about. So I wanted to let you know that if you've enjoyed this conversation, you have an opportunity May 13th through the 16th to see Toussaint Bailey live from Wealth Management Edge with some special guests. I'm gonna keep those under wraps for now, but we will be announcing, and I'm extremely excited, Toussaint.
Yeah, and the special guest will be one of them. I know will be better than me. So, yeah. So I'm beyond excited to do that. You know, I'm honored, and I can't wait to share what we're doing with a broader section of your audience. And hopefully make some difference, make some money,
and make some difference. Right? Let's make that the soundbite from this conversation. We are excited about working with you. We're also excited about changing the world together. I wanted to ask you before we kind of close up, in terms of you being a visionary, thinking forward and thinking about maybe something that's under, maybe that isn't being paid attention to right now, that you think is the future, that you think is next. What is on the next frontier that everyone should be watching out for, that they'll look back and say, Toussaint said it first?
Yeah, so it is that we're seeing those consumer expectations. Like the consumer is changing. Like the expectation for engagement, the expectation for personalization, the expectation for better, like driven by all the names, right? Apple, Google, Netflix, all of those folks. It has come to wealth management. And I think up to this point, we've talked about that in terms of ancillary services. I'm going to need to add, estate planning. I'm going to need to add a tax component to what I do. I'm going to need to add all these things and bring all these things in-house. That's coming for the core portfolio. Like that, those expectations are coming. And so as we see this shift to more experiential investing, and private market investing is really just more experiential investing, I think we'll see that mature. Right now, I think of a lot of folks doing private markets investing, a lot like we did stock picking before the mutual fund and ETF started to make that more sophisticated in a tidy wrapper. Right. I think we'll see experiential investing continue to get better. I hope our firm continues to be the future of that. Things like values alignment, things like, portfolio tailoring, and all of that done really easily, quickly, conveniently to the advisor and firm is the future.
Absolutely. Toussaint has his own podcast series called Uplifting Conversations. Please go and check that out. We're so honored again to have you as part of the wealthmanagement.com family. And with that, I will leave you all to digest this incredible conversation that Toussaint has led. Thank you all so much for joining us today. iShares and S&P Dow Jones indices are proud to support the Wealth Management EDGE podcast and financial advisors. With more than 1,250 products worldwide, iShares is dedicated to empowering millions of people to make their money work for them. Visit www.ishares.com to learn more. S&P Dow Jones Indices is the largest global resource for essential index-based concepts, data and research, and home to iconic financial market indicators such as the S&P 500 and the Dow Jones Industrial Average. iShares and S&P Dow Jones indices are unaffiliated entities.